Okay, fantastic. Right, let's get started. Good afternoon, everyone. It's Tuesday, the 1st of November. It's 1 p.m. Eastern Time, which is currently 5 p.m. in the UK. I've just got to say, for legal reasons, that this webinar is for information and education purposes only, and nothing said, not said, or implied is a solicitation to buy, sell, trade, or not trade in any vehicle whatsoever. And also, I have to point out that I am not a registered financial advisor. Okay, so I got that out of the way. Great. Well, listen, thank you very much for taking the time to join me. I don't want to go on for too long or take up too much of your time. So what I'm going to do today is briefly introduce myself, and then we'll go and look at a few charts. And what I'm going to try and do is show how the methodology that I use can make them readable and therefore accessible to just about anyone, whether you're a beginner, a newbie, or whether you're an experienced trader. And then finally, I'm going to talk briefly about my new website that's now up and running. So just very quickly, a few words about me. For those that don't know me, my name is Ben Drage, and as you can probably tell from my accent, I'm British. I'm based in the UK. A little bit of background. I read law at Oxford University and did bar finals exams, and then started work in the early 1980s in the City of London, working in the money markets. And I was there from 1982 to 1998. I worked for various boutique firms specializing in what was then the nascent interest rate swap market. It's grown, considerably since then. In 1998, I decided to leave in order to concentrate on my personal trading. And that's pretty much what I've been doing since then. Right, now we've got that out of the way, let's go and have a look at the charts. And hopefully I'll show you what I mean when I talk about decoding the markets. Now, in very simple terms, traders and investors look at charts in order to establish likely areas of support and resistance. It sounds hugely obvious, but you basically look to buy at support, you sell at resistance. In front of you, the chart you're looking at is the FTSE on a daily basis, and I assume that most of you can work it out. It makes sense to you. You can see where resistance is along this line here. You can see where the support is, down at the bottom here. You can see, importantly, where resistance here turns to support. Yeah? Great. In short, because you can see the pattern in this chart, it's this kind of chart that you can trade with confidence. And the reason is that we like patterns is because our brains are wired to respond to them. So when you see the pattern, you feel comfortable with it, you can therefore trade it. What I'm just going to do is take this back to a bear chart. This is exactly the same chart, but without any indicators, anything on it at all. Okay, that's exactly the same chart. Anyone feeling a little bit lost as to whether to buy, sell, or what to do? Exactly the same. Let me just mark it up for you. Let me show you what I do. Using a pitchfork, I go from a low here up to a high, down to a low again, and already it's starting to make a little bit more sense, isn't it? We continue, we can mark it up, we can go down here, we can just draw a little sliding parallel across. We can copy that across there, copy that across there. You see how simple that is? Just a few lines, the pitchfork giving a really nice framework, and then just some internal lines, makes everything much, much clearer. Let me get rid of it again. See how you like it. Not so great. So listen, all I'm doing is giving context or framework to the movements of price, and there's nothing magical about the pitchfork at all. All it's doing is putting the price movements into a structure which our brains can recognize and can appreciate. And within those, we can then look for what we like to see, which has high probability areas of support and resistance. So whether you're a newbie or a seasoned professional, when you can see the pattern in a chart, you can trade that chart with much more confidence. Okay, I'm going to move on from there. You're probably sick and tired of looking at the FTSE now. I'm going to go and have a look at Aussie dollar. Again, this is Aussie dollar completely naked on a daily basis. All I've done is mark a couple of horizontals across here, which I guess, people would mark the lows, people would mark the highs. And, you can see there's a gradual drift to the upside here. I mean, somebody else might come in and maybe, want to put a lower high across there or something like that. Yeah. Again, what I'm going to do is just mark it up using a pitchfork. I'm going to go down here, go to an A, a B, and a C, and all of a sudden, I think you'll agree, or I hope you'll agree, it makes a lot more sense. You know, the reason the price stopped up here was not just because of this horizontal across here, it's because we ran into the upper parallel. When it fell, why did it stop here? Because we've met the lower parallel. When we start moving up again, you see resistance once, twice, 3, 4 times. We start to fall again. This is where we get the support. But we go a little bit further than that. I mean, this is all very nice when you've got something trending in one way. But, you know, why have we got this low here? Why is this low here? You know, why isn't price moving any higher? Again, you know, you can try and put a horizontal across if you want. I mean, that's not really working. That's kind of working. All I'm going to do is I'm just going to go up to this high here. Again, high, low, and high, and I'm just going to change this. We don't just use Andrew's pitchforks, we use different kinds of pitchforks as well. Okay, this is one. My system's set up so I can just change shapes. I can go to an Andrew's pitchfork like that, or this is in fact something called a modified, an unmodified shift. Don't worry about it. Okay, all I'm just trying to show you here is that by looking for supports and resistances, we can understand what's happening here. We can understand why price moved up and rejected. And if you look at these bars here, that's a really strong rejection, followed by another one there. And again, when we come up to this high here, look at this bar to the downside. Really strong rejection down. And this one just a few days ago, almost got to the high and a really strong rejection down. Okay? All I'm trying to do, once more, as I say again, is to try and give some perspective, to try and give context to how price is moving. And some of you, let me just get rid of the downfall for the moment. You know, what we can also do, we just draw a line across there. Look at this, you get the lows, the lows, the lows. Things are happening in the line of the fork. Okay? I know that there are a number of people who are involved with the service who've been trading the Aussie dollar, really because it's just been running so very, very nicely across here. Let me just change this again. Okay, and what they've been doing is they've been buying on this line down here and selling when they get close to this line up here. You know, a buy down here at 75.12 or so, and a sell at 77.45. Just very nice small moves, but as I say, high probability and low risk. That is the holy grail of trading. That's what a lot of people are after. Now just hang on one sec, I'm going to have a sip of water. Just going to mute myself a second. Okay, I'm back with you. So that's the Aussie dollar. I'm going to go over and have a look at another chart, do the same kind of thing. This is the ES I want to go and look at here. Where are we? Yeah, there we go. Look, this is the ES, and again, this is a pretty naked chart, I've got to say. All I've done is I've drawn a high from the May 2015 highs back there, just drawn that across. And I guess that's what quite a lot of people are looking at. But again, you know, we can get a lot more nuance. We can get a lot more of an idea of what's going on in the market by taking a pitchfork. And again, look, all I'm going to do is going to go low, high, and then a low down here. And all of a sudden, I hope that you're seeing that things are beginning to make a little bit more sense. That what we're seeing is we're seeing resistance across the median line of the fork here. That's the middle line. Resistance there. And resistance across here, and price is just falling away a little bit from that. Again, if I just get rid of the fork, you know, we've seen price falling away. If you're looking at the horizontal, I guess you'd be thinking, well, you know, when we're above the horizontal, it's really bullish. When we're beneath the horizontal, it's quite bearish. Let me just get that fork back on. There you go. But here's where I'm just going to show you how we can get a little bit more subtlety in things. You can see up here, first of all, we get resistance pretty much at the median line. It's just a bit above it, and then the next time when we come up again, we're at the median line again, and price price just kind of drifts away a little bit. What I'm going to do is I'm just going to add in some sliding parallels, and sliding parallels are just lines in the line of the fork but within the main part of it. Okay, let's just go put that in there, and look at this fork. This bar across here, it was support, it was support, it was support, becomes resistance. We go down, up through it again, support, and then as soon as we break underneath it here, we really see quite a big dip. The support turns into a kind of resistance. Also, let me just draw another one. Just go across here from these lows here. Okay, again you can see the support turning into resistance, and price is very definitely falling away. Again, we've got this big spike down here. We were watching this a couple of days ago. You know, support, we got a bit of support, we got a bit of a bounce, and today we're actually falling through that. That is not a good sign. To me, resistance has lowered all the way from up here to here exactly at the median line, to down a little bit lower along this green sliding parallel here, even lower to down here, and now potentially it's moved all the way down to this. What I'm going to look for is if price moves down below it and comes back down and finds resistance along this line, support here, then becoming resistance, that tells you price is going to continue to the downside. Okay, let me just switch over to the Dow, because we've got a very similar situation here. I'm not going to spend all the time drawing all the fork in for you, but I'm just going to switch over to the chart that we're actually using for the service at the moment. And again, you can see what I'm looking at here. You can see the nuances and the detail so much more than if we're just looking, you know, at this across here. Okay, so let me just run you through this quickly. Again, we have resistance up at the median line there, then it's a little bit lower across here. Look, by the way, where price fell to when we fell lower. Stopped at the lower parallel, recovered from there. It went up to here. This is as high as it got. If the strength of the move was going to be as strong as it previously was here, then we'd see price going up to 19,135. It didn't. It stopped down here, and price has fallen away again. And then we have this support here. Look at that, support, 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 support there, turns to resistance, down we go. And again, you see it here at the lower parallel, support turns into resistance. So this is what is continuously happening. This is a daily chart. I mean, we're tracking it on smaller time frames as well, but I just want to give you an idea of how we use forks moving to the downside like this. Okay, I hope that's clear with everyone. I'm getting a couple of questions coming up. What I'm going to do, if you don't mind, is leave questions to the end, because otherwise I'm going to get thrown off track and technically I get in a right mess. So I'll answer your questions. I'll come back to you at the end, if that's okay. Yeah? Great. Okay. Let me go and have a look at another one of the currencies. This one is Kiwi CAD. This is Kiwi CAD on a weekly chart. I don't know if any of you people have been seeing quite a bit of talk. People have been talking about head and shoulders patterns, you know, shoulder, head, shoulder, and watch out along the neckline, what happens along here. Yeah, you've been seeing people say that? Yeah, I know. Well, that's great. You know, people are talking about breakouts around about 95, 85. What I've been doing, or what we've been looking to do, is go much longer than that, go back quite a long way. Okay, this is Kiwi CAD going back to 2006, and these are the this is a chart that I've been watching since then, or pretty much since then. I won't. No, hang on, about 2010 I've been looking at it. Okay, well before my service started. And all I'm going to do again is just add in some lines. Look at the resistance here, resistance here, resistance here. Works pretty nicely. Let me just go across here. Support, 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 and again resistance. Then we come up and support. But more importantly, let me just look at what's happening down here. I don't particularly mind if price falls out of the fork. Okay, what I'm following is the path of price. So this line up here to me has as much validation as the median line, or the sliding parallel here, or even if we fall underneath the fork. But what I wanted to just point out to you was what's been happening really in the last year, 2016. we've had a sliding parallel where we've seen previous support here. We've come back down, moved up again. We've tested it for 4 or 5 weeks. Remember, these are weekly bars. We've tested it down at 0.87, and since then price has been moving up. Okay, the people that are getting into this chart just because it broke above the neckline are getting into it at 96.70. We could have been in it from 87, nearly 1,000 points lower. Okay, and again, as I say, once you see the pattern in this chart, once you begin to notice what there is, it all makes sense to you. Okay, you can understand why this move up has taken place. Again, let me just draw in the fork. A, B, C. Begins to make sense. Let me just put that in there. It's not working. Okay, not to worry. Somebody is still flashing up to me gold, gold, gold. I'm going to go and have. I wasn't going to do this. I'm going to go and have a look at gold. It's either because it's all over the place, or yeah, these are jumping around. This is my gold and silver chart, 1290 and 1844. Let me try and do the same thing that I have been talking about, but with looking at gold on a daily basis. I'm just going to have another slurp of water. Hang on a sec, guys. Okay, great. I'm back with you. Let me just get rid of this red fork for a minute. Look, this is the daily gold chart that we've been looking for quite some time. Been watching it, or I've been watching it since before the service started last January. Saw these moves begin to happen. Saw resistance in the line of the fork. That you can see it starting to happen along here. Price fell. Where did it fall to? The median line starts moving up again. Hits resistance. Okay, you can see what I'm doing here. It's been working very, very nicely indeed. Now, in the summer, we hit a high up here in July, 1378. We started just falling away. You can see these highs up here. Okay, that's the highest we got to. A little bit lower, a little bit lower. We started getting underneath this green sliding parallel once more, and then a bit lower. I mean, this is all a little bit concerning. You can see that effectively price is weakening. The strength of gold is weakening. So what we did was got hold of a pitchfork. High, low, high. I'm just going to change that color because I like my down pitchforks to be red. And you can see that what this does is it shows the resistance as we move along. So it was no great surprise to us seeing resistance lowering in terms of the blue fork from right up here to here to here. And we're also watching it in the red fork as well. So when we got the big move down, when we started losing further support, we moved all the way from 1348 down to 1242. It's over $100. Where did we find support? Along the median line of the fork, of the red fork. Okay, this was not unexpected. We couldn't guarantee it would happen, but this was one of the places that we were looking to find support. And once that had happened, let me just change this into, there we go, just make it a little less clear. Let's start looking again back in terms of the blue fork. We'd already had support in terms of the blue fork. We'd already had lots of lines working in the line of the blue fork. So all I did, once we found this low here, was come in and just draw a sliding parallel across there. And lo and behold, we moved up. We found a bit of resistance. We came back down. Where did we find support again? I can't go in much closer than this. Absolutely in the line of the fork. So that told us that the blue fork was still working. That told us where our supports and resistances were. So all we've been doing since then is we've been watching to see what happens. Using, if people had got long around at 1246, they would have put the stop beneath 1243 there. If they got long a little bit later on, they would have gone underneath this line in terms of long stops. Okay. Just one other thing I want to point out. This is in terms of the red fork. We've got a sliding parallel off that low, which this really strong bar, if you look at it, came down and ended bang on that. Okay. The fact that a bar that strong ended exactly there tells us that there's something happening along this line. So if you just look at what we've been following, when price came down, just look at the red fork at the moment. moved up, we found a bit of resistance underneath that sliding parallel, that green line. Okay, a few days back we went above it, we come back down and we started finding support on it, and price started to move to the upside. So what we're doing is we used a combination of the two forks, the down fork and the up fork, to effectively show us where the likely supports and resistances were in gold. Now, obviously, we didn't look at that in isolation. Let me just show you this. Okay, this is my weekly gold. I don't want to show everything because I think it's unfair to subscribers if I do that. But another line we were looking at was this potential low, this sliding parallel here, which again caught price, pretty well. This is a weekly chart. We got it to within about $5 or so. Okay, didn't work perfectly, but it was close enough. Again, that is something that we were looking at in terms of finding support, of looking for a reason why price should stop here, should stop the move down here, and should start to move up once more. Yeah, all right, show the 240. And since then, I've been drawing charts to the upside off the basis of the low that we found on both the weekly and the daily. Okay, what I've been doing is I've been following this chart. I've been drawing a 240-minute chart, and recently we've been seeing this running really, really nicely. We've seen support here just beneath the lower parallel. I don't really mind that. Just beneath the lower parallel, we've been watching our resistances all the way across here. Okay, and today we've seen a little move above that resistance. So great. This is a 240-minute chart. It's not going to work forever. It's not going to take gold to 500. It's not going to take gold to 21,000 or anything. This is how it runs. So all I'm going to do now is I just look for more spikes. Just put lines off those. Those are potentially my next resistances. What I'm going to look to see is if the resistance that we saw along here turns into a bit of support. That's all I'm going to do. Does that make sense? Yeah. Okay, I'll just look very, very quickly at Swissy. Swissy, I'm still saying that. This is silver. Let's just forget about the red fork for the time being. Silver again, been running. This is a daily chart. Been running since January. Support. Moved up, came down. I don't need to take you through it all the way through it. Just look at this though. Support turns into resistance. Okay, that's when we knew price was going to come down. When it came down, where were we looking at support? Bang. Sliding parallel there, sliding parallel there. You could not have got any closer. You really could not. Okay, and up we went. This was also shown if we go and have a quick look at the weekly. Again, I'm not going to show everything here. We saw price fall to our weekly support. This is where we found it. Prices started moving up from that. And again, it's the same with what happened on the 240-minute chart. Again, as I say, I don't want to give all the secrets away on a free webinar. I hope you understand that. Yeah? Okay. Right. Yeah, I will get to the questions in just one sec. Let me go and look at one other thing I wanted to look at, and that was oil. And I thought that was going to maybe help us to see how we look across time frames. Okay, this is oil, the futures CL. All right, this is a weekly chart of that, and I've been nervous about oil continuing to move up for a couple of reasons. One is because of this green line that I've got. Oh shoot, I've gone out too soon. Let me just come back. Okay, I've got this line. Action reaction line from this high to this high, and all I've done is I've just copied it in a couple of places, and it's working quite nicely. Okay, one of the places I got was off this support here back in 2012. There was resistance there in 2015, and as you can see, this is a line that we were approaching once more. I was also looking at this ABCD formation. Are people familiar with that? Okay, A, B is equal in length to C, D. And what I noticed was the 50% between the two was there, 52.11. That's where we got a reaction. That's where we turned down from. So let's just say that off the weekly chart, we were prepared to see a potential top in oil. If we take it down and go and look at what we were looking at in terms of the daily chart, This is the daily chart we were watching. You can see price moved up very nicely here. It hit resistance at the median line of the fork, fell back to the lower parallel, very precise touch there, moved up again, but instead of going as high as the median line, it stopped a little bit lower. Okay, so we ran a sliding parallel off that high, and it caught that high absolutely perfectly. Okay, all this is telling us, even though horizontally we're higher than this, yeah, 48.80, that's 51.70. Even though horizontally it's higher, in terms of the fork, in terms of the strength of support and resistance in the fork, we were less high. So prices moved back down a little bit. What were we looking at again when price moved up? We were looking to see if it could reach this higher at the top green sliding parallel again, but it didn't. What it did, it topped out here, again a little bit lower. So it's not a surprise for us to see price moving to the downside. So we've got confirmation from the weekly, we've got confirmation from the daily that we were likely to see price moving to the downside. So I'm going to go down one step more, go to the 240. Just ignore the red fork for the time being. Actually, I'm just going to get rid of it temporarily. Okay. So this is oil on the 240-minute chart. We see price move all the way up to the quartile here. Okay. Next time it comes up, it doesn't go up as high. The height it reaches is a previous level of resistance. Green sliding parallel, resistance there, support there, resistance, resistance, and we fall away. When we start falling away, that is goodbye to this line. Not only is it goodbye to this line, we never got near the quartile again. So as I say, resistance is lower, is lower, is lower. And look at this sliding parallel. Support here turns into resistance, and down we go again. So all in all, it hasn't been a surprise. And again, all I've done is just draw a fork to the downside, A, B, C. Let me just get rid of that. There you go. Actually, let's make it heavier. And just watching this. And all we were watching was what happened. We nearly got to the upper parallel, didn't quite get it. Saw a bit of action around the median line there. That's quite nice. Started moving to the downside. Where did we get a bounce from? We got an immediate bounce from the lower parallel, pushed up, hit the quartile, and we're back down again. We're getting some support along this lower parallel. Okay, I'm not saying this is going to last forever. I'm not saying the price is suddenly going to move up to to go back to the highs. All I'm trying to show you is how using the pitchforks just defines the price a little bit. It just shows us likely supports, likely resistances. Is that clear? Good. Okay. Look, guys, that is pretty much all I wanted to initially say. Yeah, I will come to the questions in just a sec. Effectively, that's a quick spin through what I hope are some fairly interesting charts. And for those of you that are a little bit more used to what I call lagging indicators, derivative indicators like RSI or MACD, things like that, maybe it's just been a little bit of an eye-opener as how we can project forward to try and find likely areas of support and resistance. And that really is what Forex Analytics is all about. I'm trying to produce clear and uncluttered charts which give you those high probability and low risk entries and exits. Because once you can put a pattern on a chart, you can understand the chart, and in turn you can then successfully trade the chart. Well, that is basically what we look to do. We've got two services. Let me just talk quickly about this. I won't take too much of your time. We've got two services, metals analysis and market analysis. And as it says on the tin, metals looks at the precious metals only, not just in dollars but in other currencies as well. Whereas market analysis, which includes metals but also covers indices like ES, Dow, FTSE, commodities like oil, and also all the currency stuff that I've also shown you. And also, as you've seen, for example, with Kiwi CAD, it looks at the non-dollar pairs as well. Both services have daily video analysis that I put out before the London Open, and in them I try and highlight moves and key areas to watch through the next session and also in the coming days. We've got some live chat rooms where you can post your own charts or analysis, and where also I can comment and just update things during the course of the day. And market analysis also has a couple of live webinars like this every week, again where we go through key charts, and it's slightly more educational, I guess, than maybe the normal stuff. Just let me have one slurp again. Hang on a second. Okay, sorry about that. Listen, as you can probably tell, I'm rapidly running out of steam here, but I hope I've given you some idea of what I look to do in just trying to simplify the charts, trying to make them nice and easy so anybody can actually see them and can actually find trades, can find high probability, low risk trades to get into themselves. By putting the moves into an understandable context, you put them into a tradable context. And while I think that the methodology has great benefits for traders and investors, I appreciate that for quite a lot of people it's a little bit of a step out of the mainstream. But there's a quote which I really like, which says, if you want to have a better performance than the crowd, then you have to do things differently to the crowd. And that's kind of the ethos that I'm trying to follow with Forex Analytics. So guys, and ladies, if you're intrigued and you want to find out a little bit more, well, please go and visit the website www.Forex-Analytics.com, where you can see that I've actually got a special introductory offer on the go. It's only going to be there for the next day or so, so please have a look about it, have a think about it, about things. That introductory offer for a month's access is only $20 at the moment, so it's hardly going to break the bank. There are some more videos on the site, so please have a look around, and if you have any questions you can always contact me about them via email, support@forex-analytics.com. Okay, I'm also going to send out an email to you just after this with a recording of this webinar, and it'll also have those details on it as well. Now, there were a couple of questions. Yeah, I know. Marcus? Yeah, I'm using Ensign with eSignal feeds. Ensign is an eSignal. They're both US products. I think if you just Google Ensign software, eSignal software, that'll probably come up. Yeah. Jeremy, hi, how you doing? Jeremy says, can we have a look? Do you cover? Yes, I do. Do I cover miners? Yes, I do. Silver Wheaton, he's asking me if we can go and have a look at. Actually, I'll just do this on a weekly. Look, just while we get there, this is NEM, which is, who is it? I can't remember. Mine's gone blank. Doesn't matter. Look, just very nicely on a weekly chart. You can see the sliding parallels. What I'm looking at here: resistance becomes support. Price is starting to move up a little bit. Okay, you wanted Silver Wheaton, which I also cover. Let me just get rid of that for a moment. Silver Wheaton's been in downtrend, as all miners have since 2011. Been watching it as we go with this red fork to the downside, red pitchfork to the downside. Pretty much, I think when we moved past this peak, 27.46, when we moved past there, I started looking to see if I could find anything to the upside. And the chart that I got, what I originally started looking at was this, which I guess is kind of steep, not really showing me anything. That's an Andrews fork going from the low in 2008, A, B, C, and eventually, look, I just come round. I like it like this, as an unmodified shift, right? Because look here, when price moved up, bang, it hits the median line, comes back down. All I've done is I've just drawn this little bar in here. You can see just off that high. Okay, we get resistance there. Let me go in a bit tighter. Here we go. You get resistance here. You get resistance here. When price moves up, hits that, comes back down, it finds support. Where does it find support? Not only on this bar here, but also in the red fork along that sliding parallel there. If you just get rid of that one just temporarily, you can just see how nicely that's worked. Resistance becomes support. And I mean, anyone will tell you when resistance turns to support, that's bullish. So that has worked very, very nicely indeed. Yeah, Andrew, thank you. Yeah, everywhere. Andrew said this. Oh God, yeah. I've got 5 people coming up and saying it's Newmont. Yes, it's Newmont. Thank you. Newmont Mining, very nice indeed. Resistance, resistance becomes support, support. This is what's happening with Newmont. Where is my next line of likely resistance going to be? Up there. Okay, we haven't got an awful lot of data on this fork yet, so don't treat anything as gospel. But this looks quite nice, the way the resistance here turned into support. You could argue that any of these lines really we could be finding resistance, but I quite like it up there. And I'm also just looking at this as I do now. Just have a quick look with an ABCD. Where would that come out? AB equals CD. If we kind of hit this area, 48.59 in early 2017, I'd just keep a little eye on that. Okay, that's a little extra one. Just have a bit of a watch for that one. Okay, I've also I've been reading your text. Okay, this is Maria says I've been looking at your tweets. Really appreciate it. You've put a couple about euro. Can you talk about euro a little bit? That's the euro on the daily. I think I've been talking about, isn't it? Yeah. Okay, sure. Yeah, I think this is probably the best way to look at it. Okay, euro has basically been going sideways for most people since 2015. Yeah. But within that, we can get all kinds of interest and subtlety. First of all, we were looking at this fork to the upside. The reason we did that was because of this high here. You know, it broke up out above all the horizontals. So we were looking to see if price moved up. The important thing about the blue fork is this lower parallel here. Okay, look at that bar there, bang on it there. Then we get support there again. Price moves up and strongly. This is Brexit time. It moves through there, and all of a sudden you start seeing the support turn into resistance. Okay. And even though we're below the line of the blue fork, it's still running nicely in the fork. You can see all the support pushed up to resistance, back to support, etc., etc. But we were wary because resistance in terms of the blue fork is getting lower and lower, particularly, as I say, with this lower parallel here. So all we did, A, B, C, and lo and behold, what do we start noticing? When we start coming up and hitting this upper parallel, we move away. And look at this, for example, this strong bar here, really strong bar from just underneath the lower parallel, very, very strong bar. I mean, that goes from 113 is the high, 113 and a half down to 111. So big bar indeed. So all we do is we start saying, okay, maybe we've got something to the downside. Look, when we hit it the next time, reject strongly. And that is basically how this chart built up. Now, as we move down, yeah, let me just switch over. I'm just going to go and show you the weekly chart on the euro. Okay, it's here. Again, I'm not going to give all the game away. I'm not going to show you everything, but we've got a line of support that we've been watching for quite some time, running from 2015, okay, all the way through for a couple of years, and we hit that line around at 108.50, right? So just remember 108.50. We'll go back. We'll have a look here. This kind of area, 108.50. These are sort of the lows. So we were prepared for us to find a bit of a low here. All I've done is run a sliding parallel of this fork here, or of this low here. Okay, in the line of the red fork, lo and behold, found a bit of resistance, found a bit of support there, and we start moving to the upside. What am I going to do from here? As we approach the upper parallel, I'm going to start getting nervous. If we start moving above this 112.10, I mean, anything could happen with the current elections, with FOMC coming out Thursday. We've got or Wednesday rather. We've got we've got non-farm payrolls Friday. You know, look what happens. Does this line continue to hold? If the line doesn't hold, I don't mind. You know, if it moves above it, does price then come back down, find support on it? That will tell us price is going to move to the upside. All I'm going to do is I'm going to switch my attention from the red fork back to the blue fork, and I'm going to look at this line here, the lower parallel, the resistance. I'm going to keep watching that. Okay, But obviously before that, keep an eye on that. It would be a significant move, shall we say, if we managed to take out this red line here immediately in one go. Quite a significant move. Yeah. Okay. Listen, guys, I'm going to go and look at one more thing. Another thing I've been tweeting quite a lot about is copper. Let's go and have a quick look at the copper chart. Where are we? HG. This is copper futures on a daily. Again, this has been running really nicely. Initially, well, we're going again from a low to a high to a low. Initially, I remember I was looking at this as an Andrews fork. I was looking at this, seeing what happened, seeing if there was any supports or resistances in that. When this low started giving way, okay, when the lower parallel started giving way, particularly when we started finding resistance there, we moved down, we started finding supports again. All I did was I just changed the type of fork that we use. Instead of using an Andrews fork, I changed it over to something called modified Schiff, and lo and behold, this worked really nicely. We got support there, we got a really good bounce, and again, look at the strong bar. Look at this kind of launching pad support. Right, it's kind of like a rocket. You don't put a rocket on marshy ground. You put a rocket on a concrete pad. So this line is our concrete pad here, and we got a really good blast off from it. Follow through again, up we went to more. Resistance, well, we found resistance. You know, we had to hunt for it a little bit. We found support there, we found resistance there, we ran into it there, we fell. Again, you know, looking at support, we move up, we didn't hit resistance, therefore not a surprise with the resistance lower, our highs are a little bit lower, not surprised then we fell again. Where did we fall to? Well, the place we were looking to find support was down here at our launch pad again. And we've moved up from there, 208.60. We're currently 223.30. We're nudging the highs here. If we move through this fork, if we move through this resistance here, I'll be looking probably at the median line. Haven't really had very much happening at the median line, but I guess it'd be the next place I'd be looking at. And all I'm going to do above that, if we continue to move higher, is just kind of draw more lines and just see what we have. Okay, so that is the idea. You know, I don't like to make predictions about price. I really don't think that's a very good idea. I don't have tea leaves. I don't have chicken entrails. We have these lines, and what we look to do is see whether we hit the lines, see whether the lines provide support. If we don't reach the lines, it means resistance is coming down, is lowering. If we turn above the lines, it means support is rising. It is in many ways very simple. But I hope, or I guess there's also a fair amount of nuance in that as well. Listen, people, I really am running out of steam here. There are a few more questions. I'm happy to answer them. If you want to email me, please do so. As I say, I'll send something out in the next hour or so, just to give you a recording of this and so forth. If in the meantime you want to contact me, support at Forex-Analytics.com.